How are you, Paul?
Good afternoon, Theo. Yes, I'm well. I hope you can hear me okay.
Crystal clear.
Fabulous. That's a good start.
I'm sure that it's going to be another great webinar today.
Thank you. Yeah, something interesting for all traders to take on board from today's session.
Yep. All righty. I think not you. Give me 1 minute. Okay. Yep. There you are.
Super. I'll just bring this up. Hopefully, bring up my screen so everybody can see. Excellent.
Okay. Awesome.
Fantastic.
Thank
Super.
you, Paul.
Thank you. Thank you, Theo. Thank you. Good afternoon, everybody. Welcome to our next in the Admirals webinar series on price action trading guide, session 33 on how to return after a trading slump. So an interesting topic here and something that is of use to all individuals, regardless of whether you've traded for 2 weeks or 2 decades. Something that is really all about managing yourself and about how to manage when you have a little bit of a challenging time, which all traders do. Okay, it doesn't matter whether you're Stanley Druckenmiller, as one of the big major hedge fund managers of the last 20, 30, 40 years, or as I say, if you're just a complete new trader starting out. Okay, everyone has a little bit of a challenging time at the at some point in their trading career. And today, what we're going to talk about and focus is really what you can do to actually how to return. What do you need to do to help you get out of that particular slump. So thank you to Theo for the introduction. As he said, we're Admirals here, Forex and CFD broker with a global presence, but local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and allowing you the opportunity to engage with markets, utilizing both MT4 and MT5 platforms. If you have any questions about Admirals, please get in touch with your account representative and they'll be very happy to help guide you. So let's talk about what we're going to focus on today. Not unsurprisingly, we'll talk a slide or two about price action trading because I appreciate we have always a broad range of people who join us for our sessions, from, as I said, from people who are completely at the start of their trading journey to those of you who've had quite a bit of trading experience. I also recognize that we have a truly global audience as well. So wherever you are joining us from in the world, we here at Admirals, we hope you're well, hope you're having a good week and a good month and a good trading year in this rather eventful year, a year which I've always said will become more eventful as we go deeper into it. But we'll have a slide or two about price action trading, and we'll talk a little bit about drawdowns. Okay, why do drawdowns happen? Is there anything we can do to help identify early warning signs? And we'll talk a little bit about how professional traders deal with them. What is it that they do to help set themselves apart in terms of how they respond to it? And as always, if there's time at the end, we'll have a little look at the live markets to see what the price action's like for this afternoon. It would be interesting to know of those of you who are here joining us live on the session, what has been your own experience with, sort of dealing with your trading challenges? Have you actually ever had a little bit of a slump in your own performance? It'd be great to hear. You can sort of pop that in the chat box, or if you're watching this later on demand on the Admirals YouTube channel, well then, by all means, you can put it in the comments or send us a question to us about it. You'll learn and know and find that there's never any judgment from myself. Everybody is doing the best they can based upon the experience and knowledge that they have, and part of being able to sort of talk about whether they've had a trading challenge or two, that can be one of the elements of actually helping people get over that. And so if you've had the odd trading challenge, by all means, put it in the chat box. If we have time and if it's relevant, I'll happily sort of try and chat and question and help where I can. So, for those of you who don't know me, my name is Paul. Traded for many years. All right, traded for funds, traded for clients. My own trading, I tend to focus on FX indices and commodities. I tend to be a trend trader for position trading and a reversal trader for intraday. But as well as being on trading floors, trading for myself, I've also coached and mentored hundreds, maybe thousands of traders over the years. So I get to see and experience and work with, the best and the most developing traders, that are in the game, so to speak. So, what I'll be sharing with you today is, my own personal experience from my own trading, but also from when I've worked with traders and funds, and also from traders that I've worked with on whether it either be a group basis or a one-to-one. So you're getting the benefit of that experience. So, and as I said, I'm very happy to take your questions as we go through, and hopefully it'll be able to help you a little bit in your own trading journey. But, this has always been the sort of Wednesday afternoon trading spotlight sessions for Admirals. They have been mostly focused on price action, okay, as a simple and basic means for traders, new traders to start with, as a way to analyze markets in order to be able to make trading choices. And what we sort of been very quick to stress is that it's easy for some new traders to perhaps be a little bit intimidated or a little bit, paralysis by over-analysis. And what we're trying to do here is just having, a little bit of understanding of price, a little bit of understanding of candlesticks, a couple of simple routines actually will help you as a starting block in terms of being able to analyze and engage with markets. And, I'm sure most people have joined us for a previous session. It really, price action is quite a very basic, simple way of analyzing the movement of price over time. And it is popular with both retail and institutional traders. And whilst we tend to focus on the longer term trading, all right, what I always stress is that, being able to read price action is like learning a new language. And once you're able to do it, regardless of what path or direction your own trading journey will take you, having a really good, solid, basic understanding of price action is a great place to start from. And, we've covered an awful lot. And, I'm always very quick to stress that all of these sessions have been recorded. They are all on the Admirals YouTube channel. So if you've missed a few of them, or there's a couple of them that maybe you think you need to go over again, you'll find they are all there and they're all available to you. So, I commend you to go and actually rewatch a couple of them if you need to understand some of the elements in particular. And you'll also find there is a whole host of other content there from, my other colleagues here at Admirals, which is, it's just a great mine of information for traders to be able to tap into. And I always start with, we go through the very simple, the basics of routine that we talk about, okay? And, when we talk about the session list that we've just gone through, there's always an element of, hard topics, all right? Topics about, let's say the hard skills of trading, namely, what's pin bars, how do you analyze a trend, but then also the soft skills, all right? The soft skills, which is things like, how do you return to trading after a bit of a slump? How do you actually sort of generate routines? Why are checklists important? Okay, because together, when they come together, that's what actually helps traders make that next evolution in their own journey. So, as I said, start with a very simple routine. If you're a new trader, whenever you open a chart, doesn't matter what it is, euro, dollar, gold, Bitcoin, platinum, all right? Doesn't matter. Open the chart. First thing, define levels of support and resistance on your chart. Start with the monthly, down to the weekly, down to the daily. Draw in those significant levels where you see prices bounced or moved from, okay, or price seems to respect. Step 2, define if there is a trend. And I say it every week, good trends leap off the chart. You don't need to force it. You don't need to push it. Good trends leap off the chart. And if there is a trend, well, that leads us to step 3, because if there is a trend, we want to be looking to buy pullbacks, okay, in an uptrend, and sell rallies, sell resistance in a downtrend. So we are looking at step 3. How does price react at those key support and resistance levels, but also things like big round numbers? So, gold has been pivoting around $2,000, all right, or dynamic support resistance, which is off those moving averages. This price bounces off those, and that in itself can be a useful trading setup. Because step 4 is about, you've identified those areas. We're looking for particular price action triggers at those levels of interest, because that is what will give us our opportunity to take a trade in the direction of the dominant trend. But step 5 is always just take a moment to just check, is it part of a bigger chart pattern? It might be a continuation pattern like a flag, or it might be a reversal pattern like a head and shoulders. Just be aware of it. Is it part of a bigger chart pattern? So, that is, it's very simple 5 steps. Again, there's another 5 steps we will go on to later in the sessions, but a very simple step for new traders just to be start to do the right routines, to make sure you're doing the right things day after day. Okay, because that's what will actually help you in terms of your own trading journey. And we've talked about, what we'll focus on, namely the dollar index and 28 of the major pairs, the majors and the sort of minor crosses, the major indices, so the major US indices, European, global, the major commodities which are available to trade with on the Admirals platform, like oil, gold, silver, palladium, natural gas, platinum, etc. You can see that. There's also equities and there's also crypto as well. Okay, so what I'd say is we start with a broad range, okay, to give new traders the opportunity to get an element of exposure. But actually, what we're looking to do is, what you'll find is as you trade and get a little bit of feedback loops, you'll start to focus down onto maybe subsets that particularly work well for you. So, it's always a bit of a standard intro because I want you to hear the same good, strong messages week in, week out. The more times you hear it, the more it kind of sinks into the grey matter and becomes your way of operating. But today, we want to talk about how to return after a trading slump. And as I said, it's one of those soft skills that completely new traders sometimes don't understand or the relevance and importance of, okay, because they're just new. They just want to know, where do I buy, where do I sell, Paul? That's all I'm interested in. But I assure you, the longer you trade, okay, the longer your trading career and journey is, you will have those soft skills, okay, will become more and more important. And one of those is, how do you return after a bit of a slump in your trading performance? As the slide says there, no trader likes taking a loss, right? And many people will do whatever they can to avoid taking a loss, which might sound strange, but is actually not always the smartest thing to do. And in trying to avoid taking a loss, that is actually what happens is when they actually do serious damage to their trading account because they're engaging in loss aversion bias. And we will talk about specific heuristics and specific biases in a future session. Most experienced traders know that taking a small loss is actually the epitome of good trading. That is demonstrating good risk management, good trading. And as I very often say to traders, your first loss is always your smallest. And in a way, your job is to be a risk manager and your job is to take small losses, which might sound a bit strange. Some people new to trading might think, well, your job, Paul, is to find big winning trades. That's nice, but actually what's more higher priority is to take small losses. But what happens when you have a string of losing trades, okay, when that actually comes to you, which it will, maybe you've already experienced that, maybe, you've thought about it, okay, I assure you at all times, you will have periods where you will have strings of losing trades. And what we'll do today is we'll explain about drawdowns, we'll do what we can sort of help them, and also sort of just start to, how do you start to come back? How do you start to return? What is it you need to do to give yourself the best chance to turn that drawdown into a positive experience that makes you a better trader going forward? And that's in itself is a hugely complementary element of building your own resilience as a trader. It's really, things will happen to you and it is how you respond, okay, what it is you take from them to make you a better trader going forward. So first things first, as always, right? We need to understand, about managing drawdowns for traders is, first to understand, do you understand actually what a drawdown is and what it involves? It'd be interested to know, those of you joining us here, if you know what it is, okay, what it involves, what has been your own personal experience, if you're happy to share, okay. As I said, there's never any judgment from myself, okay. I will share my own personal experiences of that. Everybody will have them. And it is, as I say, it's how you respond to it. That is actually what can become very important to you. So as a general rule, we talk about drawdown is the difference between the previous high point on your equity curve and the lowest point in your equity curve. And basically how much of your trading count is down from the peak before hopefully it recovers. And it's normally usually described in percentage terms, but what you will also sometimes find is for the people who are working in the sort of modern prop shops, they might also be demonstrated in dollar terms. But whatever it is, that difference between your previous high point to the low point in your present equity curve. as it says there, drawdowns is the difference between the previous high point and the low point on your equity curve. And I have seen traders, and I've experienced myself, have all manner of drawdowns. Okay, drawdowns which might be only 1 or 2%, drawdowns which may be 50, 60, 70, 80, 90%. Okay, based upon their expectations and reality, also based upon their risk management or lack of risk management. That's what generally tends to happen. And about what actually happens, how does it occur, what does it teach that trader? Okay, why has it why has it occurred, what actually has to happen to be able to sort of you'll hear me sort of talk about like turning the super tanker. All right, okay, it doesn't necessarily happen straight turn overnight. It might take a little bit of time to turn, but it's important that you're doing the right things to basically make things better for yourself. So when I talk about, with traders, and as I said, I work trading floors, I deal with traders all day, stuff, why do drawdowns happen? What are the many reasons that they occur? Well, there's lots of reasons, but, you see a lot of recurring themes, okay? Themes that come back time after time after time after time. So one of them is that their trading system, it has either failed or there has been a degradation in it, okay? So it was working, but it is no longer working. And then you start to ask, well, why is that? Is it because that trading system was just a time-sensitive method because of just the way that market was, okay, and it suited that market, and the market is changing, and the system no longer suits the market environment we find ourselves in, which we'll touch on more later. It can also be down to fatigue and burnout, and I see that especially in traders who are scalping and intraday traders. Okay, they can be very young, very fit individuals, and think that will allow them to basically sit at a desk all day for 6, 8, 10, 12, 14 hours trading away. And you can, but actually what will happen is that you will burn out much faster, okay, and you will develop fatigue. And when you know this yourselves, when you're getting fatigued, when you're getting tired, that is when you tend to make sloppy decisions, okay? It's when you tend to make poorer choices, and when you make poor choices, you usually get poor results. Or it could be down to fear or anxiety. Maybe there's fearful because they actually, there's a difference between the expectations that an individual has and the reality. Or it might be that they've had a few losing trades, and that has started to trigger a little bit of anxiety. There's generating feelings of self-worth, or it's bringing to the forefront that actually maybe they were trading with scared money. And there's a whole host of ideas, thoughts, and emotions and feelings that are drawn up through that. But very often that will lead to over trading again. That over trading can lead to the trading slump, and it's very often, as it says on the slide, it's quite often is due to chasing outlandish goals. Namely, the individual has set goals that are really way and above and beyond that individual competence, or invariably what the market environment offers at that particular time, and that becomes almost like a self-defeating loop. Okay, they overtrade, which causes for poor performance, which generates fear and anxiety, because they sort of try to overtrade more to sort of get back. Well, they get tired, so they make fatigue, they get burnout, so invariably they get tired, and so they make poorer choices, and it becomes just almost, as I said, like a self-defeating loop. All right, and what we want to do today is to sort of talk about being aware of that, recognizing it, and seeing what can we do to change that. So let's start talking about, well, what can traders do? What can you do to change? What actually has to change? What do you need to be aware of? It's very simple. It's a good quote there, is that the quality of your life is dependent upon the quality of questions that you ask yourself. And if you're having a little bit of a trading slump, well, what I talk about is the 4 M's of trading: market, method, money, and myself. And it's clear that the quicker you can identify which of those 4 M's is out of whack, it's out of alignment, okay, the quicker you'll be able to work on changing that. It may be one of them is out of alignment. Maybe they are all out of alignment, okay? You just got to ask those questions and do a little bit of analysis on yourself. Also, you have to understand, do you actually know your numbers? Do you understand your key performance indicators? Have you actually worked on that and recognize that as just as part of your trading routine? If you haven't, this is the time to start, ladies and gentlemen. And you also have to ask your question is, if you have been having a drawdown, well, do you continue to trade through that drawdown? What do you do? Do you trade through it or do you take a break from it? Okay, it'll be interesting to know, just from the people here in the room, if you have had, a bit of a string of losing trades, if you had a little bit of a drawdown, what do you do? Do you like to continue to trade through it, or do you feel like you need to take a break? Just a question to ask yourself and think about for a moment. Because what I have found is, if you're asking that question, well, if I'm having a bit of a drawdown, if I'm having a few sort of losing trades, do I continue to trade through a drawdown? Well, the first option is yes, you do. Okay, yes, you do. But what I would normally suggest, is if you do, is that basically you reduce your size dramatically, okay, by at least a quarter, if not more. I know some people, reduce their position size down to almost like a tenth of what they normally trade. Or the other option is, no, you don't trade through it. You go away, you take a break, and work out the issue. And so it's good to know and understand, what would you prefer to do? Okay, how do you manage that yourself at the moment? So Peter has very kindly given a little bit of his own particular insight. So he says, if I have a drawdown, I tend to take a week or so off and go and do something else. So that's kind of like option 2, all right? And that's fabulous. That's a really solid option, Peter. Okay, just basically take a little bit of time away. Okay, take a break. Freshen yourself up physically, mentally, emotionally, okay, and then be able to sort of take a little bit of time, work out what was the issue, so that you're in a position to change anything that needs to, and then you come back to the market with sort of kind of fresh eyes, energized, ready to sort of re-engage with your trading journey. And that's absolutely fine. Okay, I try to get across to people that I tell people to think of trading as a 5 to 10 year journey. Okay, so actually taking a week or a month off as part of let's say a 10-year journey is absolutely fine. Okay, it's absolutely fine. But there are other people who like to trade their way through and out of a drawdown, and that's absolutely fine as well. But what we normally suggest is that you reduce your size dramatically. That's what we normally would suggest. If you're trading other people's money, all right, maybe you're a trader working for an institution, all right, for a bank, for a hedge fund, or maybe you're, running one of the modern day prop shop sort of, evaluations, okay, or managing funds that way. Well, then that will have an impact, all right, whether you choose to continue to trade through your slump, or whether you choose to sort of stop and go away and take a bit of time away. It's a question to ask yourself. Do you actually have a plan for that? What is it you do, or do you just make it up on the fly? I assure you, spending a little bit of time beforehand working it out is basically not a bad thing at all. And if you have made a couple of poor choices that hasn't worked out for you, no need for you to chastise yourself. Okay, it's that you can bounce back quite quickly, quite easily, based upon on a whole host of other contributing factors. It's it's not the end. Okay, there is not a flood of damage so much. It's a case of just being able to work out, understand, okay, where you stand, so that you can make better choices going forward. So thank you for that, Peter. Thank you for that. And as I said, if you've others, who've got their own thoughts or comments, please, we'd love to hear them. Okay, it's always great to hear other people's insight and experience. So what I always say is, just take a little bit of time to go through those 4 M's of trading and ask yourself a few questions. So the first one is markets. Okay, your markets. Do you know what environment your market is operating in? Okay, is that market do you really understand if it's trending, if it's range bound, or if it's transitioning into or out of a thing? Do you know what it is, or has it recently changed? All right, has it recently changed? Have we been in a range bound consolidating market and we've now broken out, okay, and taking off into a trending market? Okay, you need to be able to identify that. Now, as it says, solution, be clear on identifying the right environment for your trading method. Stay out of the ones that do not suit you. I said back at the start when we talk about routines, you're looking to see if there is a trend in place. If there is a trend in place, it is very clear. Good trends leap off the chart at you, okay? Don't force it, don't push it. And on the flip side, when a market is range bound or a market is transitioning, if you don't know which one is your best environment, well then step away. And if you do, focus on trading the market environments which suit you. Yeah, and that might sound like, well, you might say, well, Paul, that's just common sense. And it is, but actually understanding and being aware of common sense and actually employing it in your trading business can be two very different things. Yeah, Osman says, just on the point we mentioned there, Osman says, first I took option 1, trading the way through. Then I went for option 2 and build and improve an action price trading plan for 2023. That's I appreciate that, Osman. I really appreciate your response and your insight, and that's fabulous. Okay, and there's absolutely no problem with trying one option and then being able to change and saying, well, actually, as in your case, take options, take a little bit of time away, okay, step away and build and improve on your price action trading plan for 2023. That is it's a really good response, okay, really mature, really sensible response, Osman. And so that's great to hear, and I appreciate your contribution there. Thank you. So, we've looked at markets, understanding, the market environment. The next thing is method, okay? Does your trading method match the market environment? All right. So once again, it might sound quite simple common sense. If you are trading a trend following method in a market that is trend following, well, you give yourself the best chance of being able to improve your trading experience, or trading experience. But alternatively, if you're trading a trend following method and your market is in a sideways range bound, well, it's no surprise that you're probably having a little bit of a slump or having a bit of a challenge. So understand, do you know your method? Does it match the present market environment? Has it changed? Okay, has it changed? And then you start to digging a little bit deeper into understanding, do you know your numbers regarding your method? Is it statistical standard or is it an outlier, right? So, you could all expect that, every sort of trading method, once you've got a little bit of data, you start to work out, understand, what is your average win versus hit ratios, okay? Is it just the standard one or is it an outlier, okay? How have things changed? And just take a little bit of time, go through your charts, go through your trading records, just ask yourself, how have things changed? What do you need to be aware of? And the simple solution is be clear on trading the right method for your trading environment. And that helps if you know your numbers. If you've done a back test and a forward test, okay, know your numbers, because that allows you to make sure that you're trading the right method for the right trading environment. You want both of them together, all right? There's no point trading, the wrong method in the wrong environment, because, you're just making things harder for yourself. So the third M is money. And you have to ask yourself, if you've been having a slump, are you managing risk properly? All right. Are you truly managing risk properly? Because I speak to lots of traders and they tell me, oh, yes, Paul, I'm always managing risk. But actually, if you start to look at their records, you realize that, maybe they're telling a few little lies, and really they're only deceiving themselves. Ultimately, it's about making sure that you're managing risk properly. You are a risk manager first and foremost, a speculator second. So do you know what are your cutoff levels? Do you know what your cutoff levels in terms of how many positions you might have during the day? How much value at risk do you have during the day, the week, the month? What are the levels at which you say, well, actually, I stop my trading? Have you been overtrading? And that overtrading could be in terms of the quantity of trades, as in maybe you normally trade 1 or 2 trades a day. Now suddenly you find yourself you're taking 7, 8, 9 trades a day. Is it a case of overtrading in terms of your position size? Okay, have you been sloppy in your money management? Are you basically trading a bit too much, or are you just not respecting your stop losses, etc.? All of those things. Okay, have you been doing that? Have you been keeping good records on your trades? I do not know of any trader in all my years, okay? I do not know of any trader who has had long-term, sustainable, committed success as a trader who didn't keep good records. Okay, I've never met one. I've met lots of traders who have, streaks. They'll have winning streaks. Okay, normally not because of them, but because those 4Ms are all in alignment. But I assure you, okay, I've never worked with, I've never seen someone who's been consistently successful who didn't keep good records about their trading. So one of the solutions is, if the issue is in the money side, well, scale down, okay? Scale down your position size until you either identify the true cause or the drawdown reverses itself. It's important to do that. You are, as I said, you are a risk manager first and foremost. And the final one is myself, okay? It's about managing myself, okay? Have you been reviewing your records? No use keeping records if you don't review them. I normally tell traders that you should review your trades at the end of the day, end of the week, end of the month, end of the quarter. Do that, okay? Every time you revisit that trade, you are cementing the learning, okay? You are cementing the learning, both the good and the bad points. Are you finding yourself operating on autopilot, which is an interesting point because, we've talked a lot during these sessions about having a good routine, about having checklists, etc., and they are all incredibly important. But if you find yourself that you're just operating on autopilot, that you're actually you are following your plan, but that you're not engaged with your trading, you're not engaged with your market, okay? You're just literally ticking the box and going through things on autopilot. That in itself is telling you something. That is telling you that you're probably fatigued, that you're burnt out, and sometimes that can be the early warning sign. All right, that can be an early warning sign. Things like no longer keeping your records, no longer reviewing your records, finding yourself just operating on autopilot. These are all elements that are telling you you're fatigued, you're burnt out. It's time for you to take a break. And ask yourself, when was the last time you took a break from trading? Genuinely, when was the last time you took a break? Not a day off, but actually maybe a long weekend or maybe a week or maybe 2 weeks, maybe even a month. When was the last time you took a break from trading? As I said earlier, intraday traders, scalpers, etc., they get fatigued and burn out much quicker than they think they do. And also when it comes to managing myself, do you have events outside of your trading life that are influencing your decision making? I tend to find that lots of men that I work with, okay, lots of men think that they can operate in a silo. All right, namely that their trading just stays within that silo and it is impervious to anything else that is going on in their world. And the reality is that's a load of nonsense, okay? You will find that basically other elements going on in your life will have an influence upon your decision-making and then, an impact upon your trading. So, if you're not getting sleep at night, that's not going to help you. If you're not getting sleep at night because you're out partying and drinking, that's going to have an impact. Or you're not sleeping because you're up arguing with your partner, that's going to have an impact. All of these elements, maybe that, you're struggling financially, okay, maybe your day job, there's issues or challenges there. All of these things, I assure you, ladies and gentlemen, will have an impact. And as I said, I find lots of young men like to think that they are impervious to it, that they can live and work and operate in a silo. The reality is you can't do that forever. That is unsustainable. You have to basically face up to those impacts, okay, and be able to sort of, address them. So as it says there, the solution is take total ownership of your performance. Ensure you're being honest with yourself, right? Take breaks and holidays. The clients, the traders who I work on a one-to-one basis, I like to see them ensure that they have things like long weekends, weeks away, okay, that they are already factored in. And there's reasons for that. So we go deeper into it. And that's what we like to see and work upon. So there you go, ladies and gentlemen, right? Okay, we've covered quite a bit before we'll switch across to the charts. In conclusion, price action analysis is always a way of analyzing markets using pure price action, and we're looking for price action triggers at significant levels of prices or zones that allows us to build and employ a very simple price action trading plan. So when it comes to trading, drawdowns are inevitable, but it is actually all about how you manage it. And that's a simple fact of life, okay? It is your trading life, but also your natural life. Things will happen to you. It is how you choose to respond, and that in itself is a really crucial element, ladies and gentlemen. The emphasis is on choice. Okay, if you ever want to read a book, there's a book by Viktor Frankl called Man's Search for Meaning, and a lot of that is about what comes out of the terrible situations he found himself in, is that, you always have the choice on how to respond. All right, that is it. You always have that choice how to respond. And the same way you have it for your life, you also have it for your trading as well. Okay, and that is crucial. And understanding that and working with that is that. So Philippe says, could you show us the slide about the drawdown, please? Okay. Yeah. Was there a particular slide there, the drawing of it or talking about it? Just if you let us know and stuff, I'll do that, and I will. I'll put basically happy to. I'll be happy to put that up. But as it says, whilst that's happening, understand those 4 M's. Okay. Markets, method, money, and myself. Identify which ones of those has been failing. All right. Which one of those has been failing? Has the market environment changed? Yeah, and if it is, that's fine. Understand it, change your plan. All right. Has your method been degraded? Has it been degraded because it no longer matches the right market environment? Or was it just a very short-term trading setup that was relevant in those present market conditions? Have you really been managing the money? Okay. Have you really been on top of managing risk? And have you been self-leading yourself, right? Have you actually been making choices in the best interests of your future self? That question of, we said at the start, do you continue to trade through a drawdown? Okay. Do you do it, but actually you reduce your position size, or do you step away, okay, and actually take a look at it? For me, and this was a learning point for me very early in my trading career, was that what I found was that I had to understand ebb and flow. And I also had to understand that within myself and my response and reaction to it. So I found that, when things were going great in my life, okay, when you're on top confidence, everything's going really well, that is actually when I would probably take a little bit of time, a little bit of break, go easy on myself. And on the flip side, when things were going really hard, well, that is when I would actually double down. I would work harder. I would lean into the problem and face the pain of it, etc., and want to grapple with it. And actually, what I had to learn is actually to do the opposite. To namely, when things are going well, when you're in, like a purple patch, when everything you touch turns to gold, that is the time for me to be working harder, trading more, pushing harder. Okay. And actually, when I'm struggling, when I'm having a little bit of a slump, when I'm, just not really engaged, with my trading, that is actually the time, not for me to work hard, but that's the time for me to step away. Actually, a break does me good. Having a bit of distance, both physically, but also emotionally, mentally, take a little bit of time out. That actually works well, and that helps me. But I had to learn that the hard way. All right, but most of us do. That's the way it works for us. But start to think about that. How does that impact? How does that impact there? Okay. As it says, if you are going to trade through a drawdown, reduce your size. If you choose not to, well, then be prepared to do the work to understand why. Because if you don't, well, then you're just going to keep repeating the same mistake, aren't you, ladies and gentlemen? And that, there's no point in that. Okay. So Osman says, now I'm interested in defining possible intraday price zones using smart money concepts and Fibonacci retracements extensions. Thanks for sharing your knowledge, Paul. You're very welcome, Osman. Okay. That's a sound way for you to engage with markets. I really appreciate that kind of feedback there. I hope you found it useful and helpful yourself. That's fabulous. So let's have a little look. We've got a couple of minutes to have a little look at what's been going on in the live markets and stuff. But before we do, just a reminder, our next session is next Wednesday, 24th of May, okay, session 34. And we're going to look at, in particular, how to trade price action on gold. Okay, we've looked at commodities, we've looked at FX, we have looked at, equities, etc. But let's have a little look at a very popular trading instrument, namely trading gold. There's been a lot of movement, okay, a lot of volatility in there. How could price action help us with trading gold? So we'll talk about why is gold so popular, what can traders do to help themselves, and what's the best way to trade gold with price action. So that will be next Wednesday, 2 o'clock London time, 24th of May. Check your inbox for the webinar link or head over to the website and be sure to register for the webinar. As always, you can contact Admirals there. Okay, you can see the email address there. You should also receive a little feedback form coming through to you. We'd really appreciate if you took the 30 seconds to fill that in. Or if you've got any comments or thoughts or feedback, or if there's particular topics you'd like to see me build in, okay, and talk about in the future sessions, then by all means, please put them in, and I'll be very, very happy to help you with that. So why don't we switch across to the live charts? Just have a little quick look at what's been going on. It's a little bit of a quieter week than the last couple of weeks, but there's still be some kind of interesting moves, and there's an opportunity, isn't there, for us to take a little bit of a look at and see what the price action is showing to us there. So if you just bear with us a moment, we'll just switch across to the charts and have a little look at what's been going on. So as I say, just bear with me a moment, and we'll do that. Okay, so hoping you can hear me, hoping you can still see me. So what have I got here? Well, as I say on the price action side, I have, this is a profile for the British pound. I tend to have a profile for each of the big major currencies. So hopefully you might be able to see, cable there, pound against dollar, euro against the sterling, the pound against the Aussie, pound against the Canadian dollar, pound against the yen, pound against the Swiss franc, pound against the New Zealand dollar, and then the FTSE as well, the UK. And so, there I have a very quick snapshot of what's going on with the sort of the sterling, as I see it trading against its major trading partners there. So let's just clear those down. And what I'm going to do is maybe just put this into, here we go. I'm going to just, we'll have this into like a weekly chart here, shall we? Put them across onto the weekly chart, because then what that can do is just give us just a little bit of an insight into what's been going on. So remember what saying that, looking at markets, okay, looking at methods, well, understand your market, okay, and what is that market doing? Is it trending? Is it range bounding? Is it consolidating? Well, if I just look at on, let's say, the bigger picture, well, for the most part, if I look here, pound against US dollar, for the last couple of months, that has been trending, hasn't it? Okay, last week's price action was interesting, okay, but it has been, in a trending. If I look at pound against Japanese yen on the weekly chart for the last couple of months, once again, that has been trending. The euro against the sterling has been basically operating that way. It's that is just demonstrating strength. All right, so we're seeing that is basically giving us sterling strength. When that's actually going down, because it's euro against sterling, that's showing basically sterling strength there. If I look at pound against the Australian dollar, that's been going up there. Okay, bang, that is effectively showing us basically sterling strength. We've had pound against Canadian dollar has been doing the same. Okay, that has basically just been giving us sterling strength. Looks like it might be changing because it's bouncing off a significant level there, which we might look at in a bit more. But pound against New Zealand dollar, okay, had been all right for most of the last few months. The quarter has been in an uptrend very quickly, very easily. Give me an indication that there has been sterling strength. The one place where there hasn't been really sterling strength over the last few months is basically against the Swiss franc. The Swiss franc has been very, very strong. It was very strong in sort of February, March, April time. A lot of that was, okay, remember we had issues with, the regional banks in the US, which has not gone away. It's been dealt with for the moment, but that might return after the summer. But we've also had elements of things like the sort of the debt level, okay, debt level limits, okay, in the US, other elements that have been going on, pieces to do with Ukraine and energy, etc. And that has basically effectively had markets with a little bit of a risk-off sentiment. So it's no surprise that actually the sterling has been very strong against most other currencies, but is actually against the Swiss franc has been going pretty much sideways, because Swiss franc has been very, very strong these last few months. And so what I look at that, that is me just doing the weekly chart, very quickly and easily identifying, is the trend? What is the market environment? The market environment has been, okay, that sterling has been in an uptrend. Now, that might be changing. Again, I'm looking at pound against Canadian dollar, looking against pound against New Zealand dollar, okay, looking at pound against the US dollar. That might be changing, and that's very possible. So I'll keep that. I'll go into my watch list. I'll keep an eye on that, okay, and see how that particularly plays out over the next week or two. But if I look at pound against Swiss franc, well, it's no surprise that this is the weekly chart here. So hopefully you can see since from about September of last year. So what are we looking at? That we're into May. That's about 9 months. Realistically, I would say pound against Swiss franc for the last 9 months has really just mostly bounced between 111 and 115, and hopefully you can see that. Okay, that market has been basically, mostly range bound. Okay, mostly range bound there. Now, if you're a short-term trader, well, then of course there's a short-term trader, and those swings, they in themselves are tradable. All right, if you're trading that on 1 hour charts, etc., and below, that's very good. But if you're a swing trader, as I said, we want to understand what is the market environment. That market environment has been, for the most part, just going sideways. So if you're trying to trade a trend following method in a market that is sideways, well, it's no surprise that, if that trader is probably going to have some challenges, if they're going to have some problems, because the markets and the method do not match up. Right, that's what we want. We want markets and methods to match up. Okay, if you're going to trade a trend following method, the market needs to be trending. That market for a good part of last year, you can see there, that was trending beautifully, wasn't it? Well, when it's trending beautifully, if you're a trend trader, that is when that's when that's your gravy. Okay, and when it's here, this is when actually you kind of give it a miss and go and look elsewhere. And you can go and look elsewhere because there have been so many other trends in other sterling currencies. So pound against New Zealand dollar. Okay, here on that weekly chart, I'm just going to zoom. Well, in fact, let me just see. Pound against New Zealand dollar seems to, I would say that the kind of 190. See the triple zeros. Remember what I was saying right at the start? Triple zeros, big round numbers. That has provided quite a lot of significant support over the last few years. And on the flip side, the big round number of 2 has been an area that price has gone towards, come away from, gone towards, come away from, went towards. Okay, but it's looking like it's coming down from that. And if I look at that. Okay, if I look at that, really, these last couple of months we went from like a thousand pip move from 190 to 2. Okay, and that was a nice trend, wasn't it? That was a nice trend. It's coming off the side of that now, having sort of just broke the recent high, basically broke away and down from that. But as I said, that's what we've been able to look at. You're looking at the big picture to identify, just using price action there, okay, just to identify where are the trends, okay, what is the trend within sterling, okay, and when that sterling was in a strong trend, well, that's what we want to be trading. And the same as with pound against Australian dollar, we had Australian dollar was very, very weak across the board, and while sterling strengthened. And so really from those lows back at the end of January, the lows there, and we've just had that run up. And where have we run up to? Well, we've run up to basically 190, to a big round number. Okay, that's why I say we want to draw in our levels of support and resistance. We also want to understand the big round numbers and dynamic support and resistance. You start to put that into play, well, that is what gives you the opportunity to be able to take that trades, and hence why when you went down to the daily chart, once we see price here, price is, remember what I said, good trends leap off the chart. All right, you don't need to fight it. That's what's happened, and it's no surprise that basically price, once it got above the 250 period moving averages, it basically moved there from what's that, about 176 all the way up to 190. Okay, so almost like a 1,500 point run there, and that was just basically doing normal, just basically, market never moves in a straight line, always in a trend. Okay, always a bit of a zig and a zag. But if you know the kind of direction, a good trend leaps off the chart, you want to trade with that. Okay, you don't want to fight that. You want to be able to, you want to be able to work with it. Okay. Super. So unfortunately, there we go. I think we're so overrun a little bit there as always and stuff. So there you go. So apologies, we've run out of time there a little bit, but today's session was all about that the kind of soft skill, all right, of basically understanding a drawdown, what to do to sort of once you're going through a trading slump, how do you start to analyze it, and how do you start to change it to come back to basically to return, so you can return to markets to your best trading self. I hope you found that helpful. I hope you found that useful. I hope it's given you a little bit of insight, some food for thought, or if you're having a challenge at the moment, it gives you a little something you could take away and work on, or just if you're new to trading, just recognizing when you have a slump in the future, which everybody does, okay, everybody does, just mean what you could do to effectively embrace it and work through it and come out the other side as a stronger trader. So, as always, I wish you the best of success in your own trading, ladies and gentlemen. I hope you have a fabulous trading week, and I look forward to seeing you join us for next week's trading spotlight session. Okay, Ultimate Price Action Trading Series, all about trading price action on gold. And I will see you then. Trade well, everybody. Cheers.